1031 crowdfunding offers Delaware Statutory Trust, or DST, and limited partnership in investments in real estate through CrowdTrade Securities, member FINRA SIPC. A Delaware Statutory Trust is a separate legal entity created as a trust under Delaware statutory law. It allows a co-ownership structure under which multiple investors pool their funds to own one entire property. Minimum investments are typically as low as $25,000. Therefore, a single investor may own an undivided fractional interest in an entire property or portfolio of properties, and may potentially participate in a proportionate share of the net income, tax shelters, and growth. Most DST investors utilize an Internal Revenue Code Section 1031 tax-deferred exchange. A 1031 exchange allows an investor to defer capital gains tax and depreciation recapture by reinvesting the proceeds from the sale of investment property into replacement property. Tax deferrals can be continued through as many exchanges as the investor wishes, with a step-up in basis to the investor's heirs. A step-up in basis is when the cost basis for tax purposes is increased to the fair market value at the time that the property is transferred to the heir. Accordingly, a 1031 tax-deferred exchange may potentially be used as a powerful wealth-building tool. A professional tax advisor should be utilized to ensure that every requirement of Section 1031 is met. 1031 crowdfunding maintains a selection of available DST properties for IRC Section 1031 exchange through its network of real estate sponsors located throughout the United States. These real estate sponsors offer DST investments that provide private investors with opportunity to own an interest in institutional-grade properties such as multifamily apartment buildings, single-tenant triple-net lease properties, industrial warehouses, retail shopping malls, and restaurants. Section 1031 investors are often rushed by the timing of the transaction, thereby making it difficult to gather enough information to make a suitable replacement property decision. 1031 crowdfunding opens the door to replacement properties identified through careful due diligence. In addition, due to lower minimum investment requirements, 1031 crowdfunding also opens the door for the real estate investor to diversify exchange equity into a portfolio of properties with various asset classes, tenants, and geographic locations. DST offerings are structured and offered as securities under the Securities Act of 1933, which requires the investor to be provided with a private placement memorandum, PPM. The PPM discloses various risks, fees, and expenses associated with the 1031 exchange and the DST offering. Accordingly, the investor can now enjoy the best of both worlds: the disclosures of a security and the tax advantages of real estate. Therefore, let 1031 crowdfunding help you realize the power of combining a Section 1031 exchange with the advantages of DST real estate ownership.